Good morning. Paul Georgie from Allendale. It's July 24th, Wednesday morning, and grain market's taking a little breather from the sell-off we've had yesterday, showing a little bit of recovery here this morning. Corn, beans, a little bit stronger than new crop. Old crop continues to be weak in comparison, however, with August soybeans down as much as 14 cents as we speak. The technical damage done to the charts yesterday has certainly got traders concerned. In order to relieve that problem, we need to show a recovery today, and some key chart points, I believe, is in the corn we need to close above the 490 area. In the soybeans, we would need to not close below the 1260 area today to kind of stabilize this market. Weather conditions, not really a factor here, still being watched very closely. We've got cooler temperatures for the next 10 days to 2-week period. Some scattered rain continues. It appears like the weather bull has got his horns clipped, at least for the moment, until the next stage of weather concerns will be early frost, and that is not far off on the horizon. That will be concentrating on that. But other news, we've got a wheat tour going on in the spring wheat area. Production numbers there will be out on Thursday afternoon. Overnight, Taiwan Sugar Group bought about 23,000 tons of corn from the U.S., 12,000 U.S. beans. Algeria bought 400,000 tons of optional origin milling wheat, expected to be from France, and also South Korea is in tendering for anywhere from 40 to 70,000 tons of optional origin corn. So seeing a little bit of business coming to the U.S. on cheaper prices. Some key support areas in the corn and soybean markets right now. Technically, on the corn December contract, the $4.66 area seems to be the next downside and major support area in D's corn. The 1250 area in November beans will be considered critical support. If we take that out, it certainly opens the door for lower prices there. In economic news, HSBC came out with their preliminary PMI numbers in China, reducing that number again, dropping it to 47.7 versus the final number in June of 48.2. In the livestock trade, the struggle we have is the demand for product. Cutout values yesterday in choice beef was down $2.60. The select down $1.70. Pork cutout values end of the day down just 2 cents. But if you remember, early yesterday on the pork, we had some very strong performances on the cutout values. By the end of the day, however, all of that faded away. The futures markets continue to be supported by fund buying and speculative buying here. We're sitting very near the some major resistance areas on the charts. Without some support from the fundamental side of things, like an improvement in product demand or improving cash prices, we're going to struggle, and it's likely that we could see some profit taking there, some nervousness, some liquidation by these longs that have been hoping for this market to break through that resistance area. So a lot of things going on. Stay in touch with Allendale's research. Give us a call here at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.